Energy Media readers, this has been a really bad week for the Alberta Investment Management Company, otherwise known as AIMCo. We learned earlier in the week that AIMCo had vaporized $4 billion worth of pension investments, and that is extraordinary in many ways. And we also saw a report come out from Alberta Progress about other questionable investments in the oil and gas sector that have lost hundreds of millions of dollars. And it seems like change is needed at AIMCo. To discuss that with me, we've got Greg Meeker, who has been involved from the teacher's side of the pension management for a long time. Welcome to the interview, Greg.
Hi, Markham, thanks for having me.
Now, Greg, give us your brief overview of what's going on with AIMCo and what changes you think are needed.
Well, there's a couple of different levels to it, but I mean, the biggest thing that goes on is it became public this week that they vaporized $4 billion. And according to one report from out of New York this morning, it's actually more than that. They just haven't realized all their losses just yet. You know, $4 billion out of a fund that's just over $100 billion, that's, it is just amazing the size and the rapidity of that loss. And apparently it was all related to a volatility options contract trading.
Yeah, let's talk about that. I don't pretend to understand that. I'm not much of a market guy, but what I do gather is that they basically bet on which way the market was going to go, and it was a bad bet. But the key point here is that pension funds, pension managers are not supposed to take those kinds of risky, make those kind of risky investments.
Well, everything has to be related to risk, and that's why this is perplexing, because investment companies take steps to prevent trades from blowing up on them. They take steps. And at AIMCo, they have a very large risk management team, right, of people that would spend their life trying to prevent these kinds of things. The other thing that's interesting is that this is a strategy that they've used apparently for 5 or 6 years, and apparently has generated sort of 6 to 8% on the money that's in the strategy over those years. They were taking a bet on volatility, which would have been a bet that the volatility would stay low. And as you know, in the month of March, volatility did not stay low. Stock markets and investment markets of all kinds blew up.
Right. But I guess what I'm getting at here is that we can praise them, if we will, for the returns they earned over 5 or 6 years when the strategy paid off. Feel, bad for them because they got caught, basically, with an unexpected, many people were caught. But I want to get back, my understanding from what I've read is that really pension managers are supposed to look at low risk investments, but maybe lower returns, but low risk investments that are, so you avoid this kind of situation. Or is that incorrect?
Well, you're absolutely right. Pension managers generally, especially in Canada, has been my experience, are risk adverse. And everything that they do is always with an eye on risk. And pretty much every pension plan, whether you look at it nationally, CPP certainly be the same, Ontario teachers would be the same, their risk profile is super low, super slim.
And I guess as well it should be. I mean, you're dealing with people's retirement funding here, and so it's very critical. Now, I see today there were headlines saying that AIMCo is going to do its own investigation of its strategy, and that seems, it's a bit like investigating themselves. What kind of conclusions are they likely to arrive to?
Well, I mean, I'd really be interested, but in the same breath, they also said none of that was going to be released publicly, right? They said that they've already determined that no criminal acts have occurred, so this isn't a situation where you've had a rogue trader or something like that. But it's a situation where, they absolutely need to understand what happened here, and they need to do a very detailed, but by the same token, they view all their trading plans as being proprietary. So I'd be shocked if we really had a great amount of detail over what's happened here.
Now, the last time I talked to you was 3 or 4 months ago, after the Kenney government had decided to move billions of dollars of teachers' pensions over from another structure into AIMCo, and you were highly critical of that. And I guess what this does, from your point of view, probably, justifies the concerns you had, the last time we talked.
Well, I'm just going to say I was highly critical before. I'm even more critical now, right? I mean, how can you not be? And I would say that out there in the universe, there's pension investment organizations, but I would say, and you touched on it earlier, pension investment organizations, I think, are different than straight up investment organizations. And they look at risk differently, and they look at how they structure their assets to match their liabilities a whole bunch differently than somebody who just looked at, hey, here's a bunch of assets, let's invest them. And I would say that the accountability structures are also different in some important ways as well.
Now, in the Progress Alberta report, one of the authors made the argument that, in fact, AIMCo, while it has pledged to deliver above benchmark returns, has, in fact, over the last X number of years, done exactly the opposite. It really hasn't done a good job of earning money for pensioners, despite the fact it's taken these risks. What's your take?
Well, yeah, there's absolutely questions about that. And, I don't think explicitly the Minister of Finance, I don't think really talks about that. But in the budget that came out in the tail end of October that put the changes on the Alberta Teachers Retirement Fund, there was one line in the budget that said AIMCo will be expected to produce excellent investment results. And I mean, that's why that line was in there. People realize there's a bit of a problem here, and that these pension plans have certain return objectives. Lapsed local authorities pension plans, probably the best example, where they say consistently for 11 years, their return target has never been met.
Well, and we also hear Premier Jason Kenney kind of making excuses for AIMCo, from what I can see, and really just chalking this up to, well, you win some, you lose some.
Well, yeah, but there isn't $4 billion. It's hard. You have to be able to wrap your head around a number like $4 billion. I mean, if you lost $1 million a day in a casino, Markham, if you went to the casino and just, lost hand after hand of poker and lost $1 million every day, it would still take you 11 years to lose $4 billion, right? So the quantity that's involved, the fact it's 4% of the fund, that's a huge problem. I did hear that Kenny in a day before yesterday, and he was saying, well, normal market turbulence. And no, what's happened here is the fund has lost a certain amount of money on normal market turbulence. Mercer's has put average Canadian pension funds lost to 8.1% in Q1. This is on top of that.
My goodness. So looking ahead now, and this will be the final question, what are we looking at? What do you think will happen? The internal investigation, reports to the government, not public, get swept under the rug?
Yeah, pretty much. Yeah. People are already lifting up the rug and sweeping hard, so to speak. This really, if you had to identify responsibility, this wasn't a political situation. This is a situation where the executives of AIMCo have to be held accountable, and the board, because the board has overall risk tolerance responsibilities in setting the policies for the organization and making sure the appropriate limits are in place. And the central question that I want to know the answer to, and you probably want to know the answer to, is why didn't you pull the plug on the strategy after you lost your first $500 million? Right.
That is an excellent question. And Greg, as this story develops, we'll come back to you and see if we can't get some answers.
Hey, have a great day, Markham.